Welcome back. I'm Pratap here. Today is the 24th March 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. You might be knowing it is a highly expensive training course. Even then, we are providing complete free training and all the training lessons are already available at our NeoStock YouTube channel. So at our channel homepage, click on the tab posts. Some of you might be seeing the community tab. Click on that community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. Here I kept all the training lessons. You just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one. But according to my training instructions mentioned at our Telegram channel, I provided the link to our Telegram channel in this video description. Please join at our Telegram channel. At the top of the Telegram channel, you can find pinned messages. So click on the pinned messages. One of the pinned messages are having all the training instructions. Learn this course according to those training instructions. Then you will become a very good independent trader in the coming months. Please make use of this opportunity. Now let's get into analysis of our HLQ zones generated in the previous end of the day report. Okay, in the previous report, we identified 13 high liquidity zones from daily and 75 minutes time frame. So we got around 6 trades today. So let's focus on them. The first one is Hero Motors. This is a drop base rally. This is what our software identified. And this drop base rally is a 75-minute zone. So I fine-tuned with 15 minutes time frame. So let me go to the 15 minutes time frame. Here in the 15 minutes time frame, again you have a drop, 3 base candles and a rally candle with pro gap. Okay, this is 15 minute zone. Again we need to fine tune with 5 minutes. So go to the 5 minutes time frame. If you look into the 5 minutes time frame, the structure is not really clear here because there are so many base candles. 1, 2, 3, 4, 5, 6, 7, 8 base candles. If you consider this as a failed ERC. Or if you consider this as a drop, then this is going to be even more. So but from where it picked up the orders and came down, definitely there will be some origin. That origin is actually reason for this entire formation. The lesson 22 concept, lesson 22. Lower time frame origin to the higher time frame zone. That origin you can identify rally, base, failed ERC candle, follow through candle, but this failed ERC candle structure is not good because most of the body is inside the zone. A small came out of, but some more it should have come out of the zone. Because the clarity is missing, what I did, I went to 3 minutes time frame. Because sometimes 3 minutes could be used as a supplement to the 5 minutes when you have some kind of clarity is missing or some confusion. At the time you can take a decision. See here, you have a rally candle, you have 1, 2, 3, 4 base candles and then an excellent rally candle. And from here it already picked up the orders, prices moved. And now this 75 minute zone creation, once again it picked the orders and price with a gap up after that price is moved. And then now, today, Monday morning at 10:18, prices moved up but not good enough. Once again it came to the zone, slightly pierced now, but after that see the push up till the 15 minutes target zone. So prices reach till 15 minutes target. Here you have a 15 minutes pierced zone. That is the target. You know pierced zones can be used for the target. You have a rally, 2 base candles and a drop candle. After that the zone is pierced, came down. But see today the pierced zone again holded the prices, pushed the price down. But anyway, we took the trade here at morning 9:15 candle we got the trade and reached the target at 14:15. 10:15 and 14:15. Almost 4 hours we are in the trade to reach the target. Okay, how much profit Hero Motors has given? Hero Motors has given a profit 7,762 rupees profit, which is 8% ROI, return on the investment, as per one futures margin cost. You know, we are always calculate based on one futures margin cost. So this is one trade, and the next one is a Prestige. Prestige has given 2 trades. Let us look into Prestige. Prestige is a 75 minutes high liquidity zone. It is a supply zone. How our software identified this zone? As a drop, 2 base candles, and a drop and follow through candles. And this zone is fine-tuned with 15 minutes time frame. So in the 15 minutes time frame, here you have a rally candle, 1, 2, 3, 4, 5 base candles and a drop candle. So this is the 15 minute zone. And inside the 15 minute zone, you fine tune with 5 minutes, so you have multiple order flows here. You have a failed ERC candle here as a leg-in. You have 1, 2, 3 base candles and a drop candle. But have you noticed that this zone is already tested zone? Okay, after that again you have a rally candle, base candle and a drop candle. This is another 5 minutes. See, today we got a profit from this zone. And also here this entire 15 minute zone is having an horizon, 5 minutes horizon. Look into this 5 minute zone here. Actually, you have to draw rally, you 1, 2, 3, 4, so much, it's a big 5 minutes zone you get, and drop candle. This is a medium size, 1, 2, 3, 4 candles. This is a very big 5 minutes, risk is very high. So that's why what I did, because 5 minutes clarity is missing, I went to 3 minutes time frame. 3 minutes horizon is very clear, excellent. Look into this 3 minutes. See, horizon is having actual institutional order flow. See, here you have a rally, 2 base candles and a drop candle. So this is the horizon for this entire 15 minute zone. See, from this horizon it picked up the orders and this entire down move is started. So this is the area you should plan your trade. Okay, but why I have drawn this blue color line? Because from this horizon till the stop buffer, you are getting a risk beyond 2%. Because the risk is beyond 2%, so the previously, whatever the, when it picked up the orders, the level just few points below, I just kept drawn the blue color line so that we got 2% risk management. So that's why the blue color line should be our trade. Why I didn't go so deep? Because there are higher chances you may miss the trade. That's why properly you should balance. Why I have drawn? Previously, prices reached this level. See here, previously, prices reached. When it happened? On Friday, last Friday. Last Friday, already it gave a trade from here. See what a good move it has given last Friday. Prestige. Again today, once again it reached this horizon and gave you the move. But before reaching this horizon, this is the zone. Already we got first trade. After that we got the second trade. But what about the one below? Because this is the one already tested, see, easily it is violated. So that's why we can delete this. Just I want to show you, because it is a tested zone, how it got violated. The fine-tuned 5 minute zone, we removed it. Now we got a trade, morning 9:15. Actually, it is not 9:15 candle trade. Go to 1 minute, you will get clarity. Actually, 9:15 it gave a trade. We didn't consider the trade. Actually, see morning 9:15. Oh, sorry, not 9:15. This is the 9:15 candle. There is another stock that morning 9:15 gave a trade, reached the target. After that, once again it came and reached. That is some other stock that we will discuss later. It's not Prestige. Prestige, we got the trade in the morning 9:16 candle. 9:15 trade, we won't agree. Anyway, Prestige prices did not reach at 9:15. So here it reached the zone and gave the trade here, and then it didn't reach this 15 minutes target because there is a pro gap is there. Till the pro gap area, we got 1:3.37 ROI we got till the pro gap area. See, pro gap is the area generally you need to exit. Pro gap can be used as a target. See, after that prices came very close to this zone. Actually, we booked the profit. After that, they came very close to the 15 minutes target, but a little short of 15 minutes target. But next time when it is tested, the second trade, it even reached the 15. Maybe you can exit at 15, or in this pro gap area also you can exit. Let me draw a horizontal line. You will understand here. For the second trade, you can exit in the blue color line. But anyway, it reached 15 minutes target. Performance point of view, the maximum return it has given till 15 minutes, always I consider. This is performance. But in our real trading, you may exit in this blue color line. Still, you would have got a very good profit. But there are higher chances it will reach because almost close to the pro gap, 15 minute zone it has given. But still there is some pro gap here. Sometimes what happens, price reach this pro gap, the second, the remaining pro gap area, and again it will push the market up. That possibility is also there. So that's why in a practical situation, we will exit in this, whatever the gap is, remaining pro gap is there, that area we may book the profit in practical scenarios. But performance point of view, it already reached 15 minutes. So that is the reason why till the 15 minutes area I have considered. See, the performance, how well our high liquidity zones are working, that is important. Okay, the first trade has given 3.37 ROI. The second trade has given 1:5 RR it gave. Till the 15 minutes target, till the 3 minutes horizon. The blue color line, so that we can manage the risk up to the within the 2% level. And both trades, Prestige first trade has given 5,314 rupees profit, 4.9% ROI it has given. How much time it took to reach the target? See, it gave you the trade at 9:16 and reached this pro gap target at 9:37. That means in 21 minutes the trade is completed. Just 21 minutes. After that, second trade, you got the second trade at 9:59 or even 10 o'clock, both the candles. And when it reached the target, it reached the target at 11:36. So that means in 1 hour 40 minutes, the second trade is completed within 1 hour 40 minutes. So first trade, Prestige has given you 4.9% ROI as per one future margin cost. Second trade with 9,630 rupees profit, it gave you 8.6% ROI. That is still 15 minutes target zone. First trade is the fine-tuned 5-minute zone. Second trade is also fine-tuned zone at the distal line, but this is the origin. The origin for this entire 15-minute zone, 3 minutes origin. Okay, this is about Prestige. And next one is a Policy Bazaar. Policy Bazaar is a daily high liquidity supply zone. See, today market is a bullish market. But in bullish market, we got so many short trades today. Because we got only one demand zone, 75 minutes demand zone, only one. Remaining all are supply zones. The demand zone is Hero Motors, that we already got the trade. First, we have already looked into that. Remaining all are supply zones. But today is a bullish day. Nifty moved 307 points, move it has given today. Okay, Policy Bazaar is a 75 minutes daily high liquidity supply zone. Our software identified this as a drop, one base candle, medium size candle is also part of the base. So total we have 2 base candles and then drop candle. Drop, base, drop. This is how our software identified. And this one we fine-tuned with 75 minutes time frame. I think Policy Bazaar we discussed earlier, maybe I might have explained you earlier, but I'm not sure. But anyway, let me quickly. See, here we have a drop, base, drop is there, follow through candles. Similarly, here also drop, base, drop and follow through candle. We have 275 minute zones are here. And within the 75 minutes, fine-tuned with 15 minutes time frame. Look into the 15 minutes zones. Here you have drop, base, drop. And what about here? Here you have drop, maybe rally, I consider rally, 3 base candles and a drop candle, a very big drop candle, but looks like a failed ERC, but not failed ERC. It has large candle, sufficient minimum 40% body is there, and it came out of the zone completely. The 15 minute zone. And both these 15 minutes again fine-tuned with 5 minutes time frame. Look into the first fine-tuned 5 minute zone. So this is the one drop 1, 2, 3, 4, 5, 6. Sorry, 1, 2, 3, 4, 5 base candles and a drop candle. But the only concern I have here is this candle is looking like a large candle compared to all. So really to consider a base candle or not, I have drawn this zone, but anyway this zone is already tested here. It is already tested. So that's why, because that means this zone worked well previously, but we can't plan anymore because it is a tested zone. And which is the one we should focus? This is the one. Here in a balanced way, we have a very large candle is there. Large candle, this one. But again, I have some concern. But I consider this as a failed ERC. Why I have given importance to this area is prices moved in a balanced way here. This is the area there is a balance, and this is the area imbalance took place. So that's why I considered this maybe this as a failed ERC leg-in that way. But strictly speaking, this is also looking like a base candle also. Because the one, see how I am analyzing the stocks, that you please keep an eye on this. That is important. Why I gave here I have a leg out. Now prices moved in a balanced way here. This balanced way is the narrow range. Demand and supplies are equal. From this here imbalance started in this candle. Huge imbalance. And again price moved. Failed ERC looks like, but sufficient body is there. Came out of the zone. So definitely this is a good zone. The only concern here is the leg-in is not really clear. Suppose if you draw zone up to here, risk will be increasing. That's why some kind of a clever decision you have to take. Or maybe 3 minutes zone help also you can take. That possibility is also there. Now you see. Excellent. You have a drop candle. You have 3 base candles. You have excellent drop candles. See how beautifully the 3 minute zone is clarified all our doubts. 5 minutes we have a concern whether to consider this candle as well. See, this is a clear drop candle. We have 3 base candles and a drop candle. So now prices today entered into the zone. When 14:12 it gave you a trade. And finally reached the 15 minutes target during the last candle, almost last 3 minutes candle it reached the target. See, lot of time prices were struck up here. It gave you a trade. Again it gave you another trade at 14:48. But already you are in the trade. At 14:12 you have taken the trade, 3 minutes candle. So definitely you don't take second trade again. Already you are in the trade. Those who missed, they can plan a trade here. But for them, it is like almost like last 45 minutes trade for them. Many people would have avoided the second test. But because we are already in the trade, at some point, maybe those who are in the cash segment took the trade. Probably you might have exited in one of these candle, or maybe little earlier. Probably you may require to exit. If that is the case, you might not have got profit or loss. But those who are in the F&O, you have the option to hold till the last minute. So probably here it reached the last 10 minutes or maybe last 5 minutes, it reached the target. Okay, maybe you might have exited little earlier also, because when market is closing, generally what happens? Our blood pressure will rise, right? Isn't it? Because market, we have very last few hours. So you want to, whatever the profit you want to book before reaching the target. But anyway, performance point of view, it reached the target. We have a 15 minute zone, we have a drop, base, rally. The 15 minutes target zone, it reached. And moreover, it gave you 1:4 RR till the 15 minutes target. So this is the way Policy Bazaar has given you 11,082 rupees profit till the 15 minutes target. This is 7.4% ROI as per one futures margin cost. There is one more successful trade you got, that is a Dabur. Dabur, where is it? Yeah, here. This is a 75 minutes high liquidity zone. However, software identified rally 1, 2, 3, 4 base candles and a drop candle. And this one we fine tuned with 15 minutes time frame. Here we have 15 minute zone at the digital line. You have drop, base, drop. Drop, base, drop you got. And this 15 minutes again fine tuned with 5 minutes time frame. And interestingly, you will find a high liquidity zone here. Maybe a possibility of having high liquidity here. But anyway, here if you look into this zone, we have a rally, you have two base candles, medium size candle is also part of the zone, and then you have a drop. But the origin started from this candle. Even though it is part of the base, the origin is started. That's why what I did, I have drawn the zone up to rally, two base candles, because from here the actual origin imbalance started. And risk management. And another reason for taking, see here, LOTL zone is created. Rally, 1, 2, 3, 4 base candles and drop. Of course, these two are medium size, part of the base because of these two base candles. And then drop candle. Or maybe you can also consider this as a rally, this is the base and this is the drop. That way also, in case if you are convinced, you can draw. Or rally, 4 base candles and drop. Either way, it doesn't make much difference. And if that is the case, in this area, new order flow will be added in this area. So that way you can plan a trade here. But entry planned here, exactly at the proximal line of the 75 minute zone because of risk management. Otherwise, if you are planning risk here, coming a big risk. So that's why risk management point of view, plan the trade within this. That way, when you plan a trade today, you got the trade. Actually, you got 2 trades today. First trade you cannot consider. The reason is, first trade is, actually 3 trades we got. First trade is at 15 minutes candle, 1 minute candle. Second trade, this is the one. And third trade is last half an hour of the market. So that's why last half an hour at morning 9:15 candle trades we should not consider. Go to 1 minute, you get clarity. See, 1 minute, you know what happened? Morning market opened here and it went into the zone, picked up the orders and then came down, reached the 15 minutes target and finally closed here. Everything happened in just 1 minute. You got the entry and reached the target and finished the trade. Everything in 9:15. But is it getting trade in 9:15 is not easy for us. That's why we are avoiding due to high volatility. Sometimes market opens with gap up and gap down. So you should not consider it. Looks like you would have got a big profit in just 1 minute. You feel like that. But practically execution is not so easy. So fast and so quick you have to, maybe before the market itself, you should have kept your order. But keeping trades before the market during intraday is not advisable. Because many times market opens with gap up or gap down and your trade itself will be maybe executed and immediately stopped out, and moreover, you can't imagine that situation. You get heavy losses. So that's why 9:15 we never take the trades. See, after that we got the trade, a clean trade at 9:38 candle, and after that it reached the target in 10:46. So almost 1 hour 10 minutes or 15 minutes our trade is completed. And moreover, it gave you 1:4.7 RR it gave, close to 1:5. And again last half an hour, maybe at 3 o'clock 10 minutes, see, once again price entered and then again sharply came down. Of course, it did not reach this 15 minutes, but I am trying to tell you how strong this zone is having. Maybe it is a high liquidity zone. That is the reason why multiple times it is tested, multiple times it is sharply pushing the prices down. But anyway, out of these three, we should consider only this trade, morning 9:38, morning 9:28 candle. Yeah, morning 9:28 candle is the trade you should consider. Remaining two are not valid for our intraday strategies or trading style point of view. Okay, how much profit Dabur has given? Dabur has given 5,312 rupees profit, which is 4.7% ROI as per one futures margin cost. So these 5 we got successful trades. Of course, out of 5, 2 trades are from single stock. And 2 are stopped out. One is Axis Bank. So what is that? How it is stopped out? Axis Bank is a daily high liquidity supply zone. Let's go to the daily time frame. How our software identified this zone? As a rally base drop. Rally base drop. And this is fine tuned with 75 minutes time frame. So 75 minutes we have a rally candle and base candle and a drop candle. Maybe failed ERC as a leg-in, base drop and follow through candles. And this 75 again fine tuned with 15 minutes time frame. So 15 minutes you have rally candle, you have 3 base candles and a drop candle. So this is the 15 minutes area. Within the 15 minutes again fine tuned with 5 minutes time frame. And within the 5 minutes we have 2 order flows. So here we have a rally base drop. Again drop 1, 2, 3, 4 base candles and a drop with small pro gap. And this is the one I already tested. But do we need to consider LOTL? That is a question mark, because this candle is also looking like a large candle. I mean medium size candle. Definitely body more than 55 or 60% here. So that's why I have concern to consider as a high liquidity zone. If you consider as a high liquidity, definitely you should take a trade. And if you would have taken a trade, this would have been stopped out. But anyway, it is a tested zone. Even if it is stopped down, statistics point of view, we don't consider. Even once it is tested, that is good enough. Performance point of view, I'm telling. Performance of point of view, because high liquidity zone may be violated anytime. If you consider this is a high liquidity, you should take a trade. As long as it is giving you the profits, you will enjoy. One day it will be violated, that way you will be losing. But this is a very clean. So I considered medium size candle, this one. Leg candle. Because it is a leg, it is not a. But maybe some of you may convinced this is a rally based drop, then high liquidity zone. This is a one would have been stopped out for you. But this is a clean trade zone. Definitely we have to plan a trade. But unfortunately that is violated today. So today at morning 9:40, 5 minutes candle, the zone is violated. So that's why Axis Bank has given you 656 rupees loss, which is 0.5%, including the stop buffer. Next, KPI Technologies is another one is stopped out. This is 75 minutes high liquidity zone. So this is our software identified this as a rally, 2 base candles and a drop candle. And this one is fine tuned with 15 minutes time frame. So rally, 3 base candles and a drop candle. After that prices came again went down. You can't consider this as a LOTL zone because this is a medium size candle. Maybe you could have considered this as LOTL, drop, base, drop. Anyway, this is a medium 15-minute zone. So you should look for a fine-tuned 5-minute zone. Excuse me. Go to the 5 minutes time frame. In the 5 minutes, here we have a proper zone. Rally, base, drop. Before that, the zone structures are not good. Here, maybe you would have drawn a zone, but it is pierced in this candle. Same is the case. Here you would have considered drop, 3 base candles and drop, failed ERC as a leg out as a drop. But this is also pierced in these candles, this zone. But this is a perfect zone, rally, base, drop. And this is a fresh zone. Previously prices came close to the zone, but it is not tested. So definitely such kind of zones we should not miss. But today, unfortunately, this zone is violated. After that, the entire zone is violated because there are no more order flows. Completely it is gone. So these are the 2 stopped out trades. But how much loss it has given you? 1540 rupees, which is minus 1.1% negative ROI as per one futures margin cost. So these are the high liquidity zones. Trades got executed, other stocks did not. There is one stock, we know that the zone will be violated, FinNifty. FinNifty is a daily high liquidity zone. It is having a tested zone, tested fine-tuned zone, so we know that the zone will be violated. That is what happened. So how we fine-tuned? This daily is fine-tuned with 75 minutes time frame. Here we have a 75-minute zone. See this big failed ERC as a leg in. You have 1, 2, 3, 4 base candles and drop candle. This is the 75-minute zone. And within the 75-minute zone, we have a fine-tuned 15-minute zone. Here rally, base, drop. Actually, this 15-minute zone is the origin for this entire 75-minute zone. Now go to the 5 minutes time frame. So here we have the order flow. Here we don't have any 5-minute zones. Here, and moreover, it is at the all-time high, almost at the all-time high. Here we have a zone. Failed ERC as a rally candle, base candle and a drop candle. So this is the area. You can't draw this one because this rally base drop is already gone here. This is pierced. So this is the area we should focus. And this one is already tested. And prices also see went deep inside. So that is the reason why we know this zone will be violated easily. That is what happened today. So easily gone. Next, the other ones we got daily zones. Apollo Hospital. I didn't fine tune the zone because 75 minute structure is not good. There is no fine tune. See here, you have a rally, you have a drop, there are no base candles. So that's why we didn't plan any trades in this area. Axis Bank we discussed. And next, Page Industries. Page Industries is a daily zone. Already I explained Page Industries. We discussed in the previous, one of the previous videos. Please look into the previous videos. Already we discussed. I explained how I fine tuned. Here we have a horizon, 5 minutes horizon. So this is the area we should be planning our trades. But risk is also very high here in the horizon. The risk is very, very high. The risk point of view, we should be very careful. Maybe we have drawn, maybe I think at the time, maybe I might have told you, we are not planning any trade in this area because of risk point of view. Or you need to fine tune the entry. But anyway, today we didn't get any trade in this daily zone. Next one is Policy Bazaar. We discussed Sonacom. Sonacom's also explained earlier how we fine tuned. Here we have a fine tuned 5 minute zone. This one we already discussed previously. This one also we didn't get any trade. Hero Motors we discussed. Next one is Bosch. This is a 75 minutes high liquidity zone. See, Bosch also I didn't fine tune. Why? Because 15 minute structure is not good. Go to 15 minutes. Here there is no proper structure here. Only rally based drop is there. This is already violated in the recent time when prices entered. That one is violated here. Now at the time new zones are created here. Rally based drop. This is also violated in this. Here we have a rally based drop is there, but unfortunately 7 or 8 base candles are there. 7 base candles. So we didn't consider. Even after that, this is also prices came and again came down. Here also you see so many base candles. So such kind of zones will be violated easily. That is what happened today. Because 15 minute structure is not good, we know that the zone will be violated. Dabur we discussed DLF. This is a 75 minutes high liquidity zone. And this is not having a proper 15 minute zone, but it is having a 5 minutes horizon. Go to 15 minutes time frame. There is no proper 15 minute structure here. You may say we can consider rally based drop. Already prices entered into this zone up to here and this is violated. Because it is violated, you can't draw the zone again. And here there is no proper structure, 15 minute structure. The moment I went to 5 minutes time frame, 5 minutes horizon is available. There is a 5 minutes horizon. Look into the 5 minutes horizon. We have a rally based drop. From this rally based drop, it picked up the orders multiple times, came down, and entire this 75 minutes zone formation has been completed. And last Friday, the previous working day, prices entered and picked up the orders from this horizon, and see how nicely on Friday it gave you the trade DLF. It might have given you excellent profit on Friday. And today, prices were not able to reach. It looks like there is a rally based drop. From here, prices came today morning. You may feel like that, right? But there is no 15 minute structure. Here, Friday price structure, I have seen any 15 minutes. See, this is a failed ERC candle. Drop, drop. You have a base, medium size, all these medium size candles. No leg out, proper leg out candles here. Maybe some of you may say, why can't we consider rally 1, 2, 3, 4, 5 base candles and drop? Even if you consider here, you should fine tune with some 5 minutes structure. Here 5 minute structures are not good. Even if you draw something rally base, drop some compromise and draw the zone. See, today market opened with gap up. All these things easily gone. So that's why the trade point of view, this is the lower time frame zone horizon, 5 minutes horizon. You should plan your trade. But anyway, today we didn't get any trade opportunity. And the last one is Marico. This is a 75 minute zone. Marico already we discussed, I explained in the previous. Here we don't have a proper 5 minute zone in the 15 minutes. And here we have an horizon. This is the area, 5 minutes horizon. We want to plan a trade. But anyway, today prices did not enter into this zone. So these are the high liquidity zones identified from the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.